Special coverage from the New Orleans Investment Conference is brought to you by Victoria Gold, leading Yukon's new gold rush. Welcome back to the New Orleans Investment Conference. My name is Kai Hoffman. I'm the @JR Mining Guy on Twitter, the CEO of the SOAR Financial Group. Thanks so much for joining us here, and I'm joined by Rick Rule. What's your official title, Rick? Because I've got you associated with Battle Bank here now.
I guess my official title is retired.
Retired?
I'm an investor and speculator who is celebrating retirement by starting a new bank.
Okay. As one does.
Right.
As one does. It's good to see you. You're speaking here later as well. It's quite busy, actually. Busier than last year, I have to admit. So the question is, what has changed?
Probably not much. New Orleans, this conference is in its 49th year. And I think what's important is that this conference has a core of attendees that comes back year after year after year. It also has a core of speakers and exhibitors. So there's a certain continuity of this conference. It ebbs and flows, of course. But I think there's a longevity and a tradition around this conference that ensures its success every year.
Yeah. So what I was hinting at with that question as well is, like, does it have to do with the macro situation right now that we're in? Or it's things like we chatted last year as well, and it seems like we're almost at the same spot. The indicators changed a little bit, the numbers have changed, but it doesn't feel very different.
Ironically, if you sell advice, your advice is in the most demand when it's worth the least, which is to say when sentiment's very high. You make your money in bear markets. You take the money in bull markets, but you make it in bear markets. So I suspect what you're saying is correct. Among the generalist investor and even among the sector investors, enthusiasm is at a low ebb. I regard that personally as a positive sign. Remember, Kai, I'm a check writer. I'm not an issuer. And so low share prices are in my interest. If you were talking to the exhibitors, they would bemoan a lack of interest, and I'm delighted by the same lack of interest.
Yeah, we've been chatting on and off, and we've had several discussions about that. You like the sentiment right now because it allows you to write checks at ridiculously low valuations. Have you done so?
I would describe them as fair valuations. What is a ridiculously low
Okay,
valuation?
I'm just being facetious a bit here.
I mean,
but
a company has a $50 million market cap, and it's going to lose absolutely $5 million this year.
Yeah.
What's a fair valuation? I mean, that's a discussion that we have to have.
Yeah.
When people talk about ridiculously low valuations, I would argue with you that the sector itself as a whole is valueless. If you merged every public company in the sector together, that business would lose $2 billion a year. So what's it worth? Is it worth 8 times losses, 15 times losses? My point is that maybe 5% of the companies in the sector are investable, and their share prices decline with the 95% that are flotsam and jetsam. That's what I'm here for.
Yeah. Have you written a lot of checks lately?
I have not. The issuer's expectation is that this is an unusually bad market. My expectation is that this is a reflection of corporate performance, and that the malaise in the sector is deserved. So I have not. I regard normalized markets as the markets that existed in what the industry would call the bear markets of the early 90s or the early 2000s. That included, as an example, in funding for exploration, where the expected outcome is failure, a warrant.
Right.
You need to be prepared for taking illogical risk. And the industry got spoiled in their quest for capital. They regard this as an anomalous bear market, and I regard it as real market pricing. And so there's been a discrepancy between the bid and the ask.
Interesting you say that. It's like, are the companies not desperate enough yet, despite like being in a bear market for the last 18 months here and financing's...
The ones that are desperate are unfinanceable.
Yeah.
There are companies that would give me a 5-year warrant, and you look back over the last 5 years, and you see that they spent 75% of the capital raised on general and administrative expense. I wouldn't give them any under any circumstance, none whatsoever.
We have to talk about like triggers for a turnaround in this sector, right? From the macro side, but also the micro side. Like, what are you looking for? Like, what are your expectations from the sector?
I'm sad to say I don't care about the question. All I care about is value at a fair price. I don't care about market conditions. I mean, I really don't. I couldn't care less. I have occasionally made money trading stocks, but mostly I've made money by occasionally being very, very, very right. participating early in a discovery, or participating in an out-of-favor commodity when nobody else liked it. I understand that, from what you do, which is the point of view of a guy who sells financial information, or from an issuer, exhibitor's point of view, market triggers and perceptions are important. For me as a contrarian, very, very, very bad sentiment is a very, very, very good sign. You'll recall a year and a half ago, you and I were talking about uranium. And you said, what's it going to take to turn the sector around? And I said, it's going to take care of it all by itself. You don't have to worry about it. It's only time. Arithmetic is on your side.
How's that worked out?
You tell me. I think it's worked out spectacularly well. We can talk about uranium later and where I feel about the market now. I was using it as an illustration. For me, sentiment's irrelevant, except that when the general market conditions are buoyant and the attendance here triples, I take that as a sell signal.
Yeah. Well, it's not buoyant yet. I wouldn't say that. It's like,
it isn't.
No, it's busier than last year, I have to admit, but the speaker lineup is fantastic too.
I think, I was going to say, I think that goes not to the market, but rather to the quality of the conference that Brian's put together.
Yeah. So since you're not really looking at the market, you don't really care. So I was going to ask you a question on how is geopolitics affecting what we're doing and the whole sector in itself. Is that something do you open the newspaper in the morning
I'm interested in it, but I don't regard myself as an expert. I regard myself as an expert at consuming information generated by geologists and engineers. I consider myself to be an expert at income statements and balance sheets. I consider myself to be an extremely disciplined investor and speculator. I don't view myself as an economist or a geopolitician. And so while I follow them out of interest, I don't factor them into my investment decisions at all. Nor do I think that most people should do it, because most people have opinions, which are not durable competitive advantages.
One conversation I had the other day with somebody on our channel, Darius Dale, is just look at the data, don't look at the emotion. Everything else is noise. So exactly what you're saying, right? You brought up the conversation of uranium. Really, really positive development. We're right around $75 a pound. I think when we talked 18 months ago, what was it, $40?
Yep.
Right? What has changed? Was it really just time?
Yeah. And we said at the time, there was two things that were going to happen. One, Sprott had used up a bunch of the available pounds for sale in the Sprott Physical Uranium Trust, and that over time, that the fact that the above-ground inventory had disappeared was going to occur to the whole market. The second change was going to be the pace of Japanese restarts. I said to you, and I said to many others, when the Japanese began the process of restarting their reactor fleet, that demand for increase would supply, but the available inventory held for sale would disappear. And that's precisely what happened. I didn't know when it was going to occur, which I told you at the time. I said, this is going to happen. I can't tell you when. This is inevitable. It may or may not be imminent. It turned out that it happened in calendar 2023, and the market has reacted. What's more important, I think, than the fact that the uranium price has gone from $40 to $75 is that the market transactions have gone from the spot market, which was then 85% of the total market, to the term market, which is now 75% of the total market. What that means is that the uranium industry has gone from being a price taker, taking whatever price was available on the day, to having guaranteed revenues in the 5-month time frame, 5-year time frame, 7-year time frame, even 15-year time frame. That means that when Cameco or Kazatomprom now return mothballed pounds to production, they know what the revenue line is going to look like for 15 years. There's a certainty around margins. And that makes a huge difference. Literally night and day.
You can bank against it, right? Actually, good question. How much room do you think is left in the sector in uranium? What are some of the developments you're seeing as well?
The easy money's been made.
Yeah.
When you take a market, a junior market, from hated to not hated, you have a double just based on sentiment. Yeah. So, me personally, in my junior portfolio, I've sold enough that I have all the rest of my positions for free.
Yeah.
Have I sold too early? Almost certain. I think while the easy money has been made, the big money is ahead of us. I think this market probably has 2 or 3 years to run. The fact that I think it is an opinion. It's not a fundamental. The fact that we have for sure moved from out of favor to neutral or in favor, the fact that my junior portfolio is up 300% or something like that tells me that I need to take some money off the table, which I've done. I have not sold my Kazatomprom. I've not sold my Sprott. I've not sold my Chemical. I've not sold my Next Gen. But the penny dreadfuls, yeah, I've sold enough that I'm free.
Talking about the penny dreadfuls, I had a conversation earlier. They're just getting started, actually. They were almost caught off guard. A lot of new companies coming back, or existing companies starting like, okay, let's dust this off. Let's go. Yeah. What are you seeing there on that front? Is that the typical?
Yeah, you always see the lane, the halt, and the blind. The only commodity sector other than lithium and stuff at all is uranium. Yeah. So there's a bunch of guys that failed at pot. They failed 15 years ago at gold. More recently, they failed in lithium. And they're getting set to fail in uranium. Anything where the market will give them money to be stupid, they'll do.
Absolutely. No, that's a good point. And we've seen it numerous times. Too many times, right? Other commodities. Let's talk about gold for a minute here, because we've seen a massive rally since the beginning of October, actually. October 9th from 1810 to now 19, where are we at? 80. That's a $170 move, quite massive. Yeah. Sustainable?
So I don't know. That's not why I own gold. I don't care about the move from 1900 to 2100. I don't care about it at all. I came into the racket in the 70s, and the gold price moved from $35 to $950. I made a bunch of money in the decade of the 2000s when gold moved from 256 to 1900. I could care less about $100 moves. Either way, yeah. It doesn't matter to me at all. I think that there's a chance, even unfortunately a good chance, that gold goes to $6,000 or $7,000. So I have sort of 2% of my net worth in bullion. Yeah. I don't want gold to go to $6,000 or $7,000 because that would harm the rest of my portfolio. But the idea that somebody cares about a move from $1,925 to $2,010 baffles me. Why would you care about that? You care about a quantum move, and gold has the capacity for a quantum move. There are a lot of reasons why that quantum move might occur, but it's certainly no guarantee that it will. It's impossible for me to understand why people are excited about a 2.5% move in a commodity that you should own for a quadruple.
I think we're desperate to see that the fuse finally being lit. I think we're waiting for somebody to bring the match, or we're looking for that just initial spark that lights the fuse, right? I think that's why investors look at that and there's like, oh, maybe this is this time.
It could be,
right?
I have a difficult time interesting myself in irrelevancy.
Yeah, good point. Rick, you're also here presenting, obviously, and I told you your presentation title is a bit generic, and so I have to poke you. It's like investing and speculating in precious metals and natural resources. Like, what's behind it? Like, what's the message?
It's important for people here to understand, because they have lives and don't, the difference between investing and speculating. Many people go in the exhibit hall and look at the juniors and they say they are investing and juniors. No, they're not. They're not investing, they're speculating. It's important for investors to know, too, that if they're investing or speculating in the context of them believing that there's going to be a systemic bull market in either precious metals or natural resources, that they should concentrate most of their efforts on investing, not speculating. If you have an energy bull market, Exxon will triple. Okay, I mean, you'll get a penny stock move out of a real stock. If we get a copper bull market, a real one, you don't have to buy amalgamated Moose Pasture copper. You will get a move in Lundin Mining that's a four-bagger. You'll get a move in BHP or Rio Tinto that's a double or triple. So if people are allocating capital in anticipation of a bull market, they need to invest in real companies that have the materials that they think will accelerate in price. You speculate because you think affairs within that company are going to generate alpha to the resource market. That's a very different, much more difficult, much riskier, but much more rewarding endeavor. So that's what I want to talk about. I want to talk to people about how and why they invest and how and why they speculate. Many people, most people, believe that they're investing in the penny dreadfuls, which is a poor use of English and a poorer use of capital.
Absolutely. No, almost like a psychology lesson as well for people to sort of like dive a little deeper. Is like, okay, reevaluate what you're actually doing here.
Right.
Absolutely. Fantastic. Rick, any other commodity you're excited about right now? Anything you're looking at? As you said, you're the contrarian. Uranium has run.
For
What's
investors,
next?
I'm certainly attracted to U.S. and Canadian natural gas. we've seen a recovery in it, but the delta between North American natural gas prices and Europe and Asian natural gas prices is too high.
Yep.
And it's going to be resolved. And it's going to be resolved to the upside. Right now, the North American natural gas stocks are out of favor, even compared to the oil stocks. And the price arbitrage between North American natural gas and non-North American natural gas is as broad as the price arbitrage was in uranium 18 months ago. And it's free. In fact, it's better than free. You can play the Devons of the world, the Equitables of the world, the Tourmalines of the world, the Peytos of the world, the Birchcliffs of the world, and they pay you generous dividends while you wait for an inevitable repricing. This is silly. Now, I explained that to somebody who believes that he is investing in Amalgamated Moose Pasture Silver, and his eyes glaze over at the prospect of a 6% dividend. People who understand something about markets and value, their eyes don't glaze over.
Since you bring up yield, like dividend yields, I have to ask, I didn't mean to ask about bond yields, but how much the bond situation right now, the 10-year bond is yielding 4.7 today, is competition for our sector in general, or for the resource sector?
It probably is. It shouldn't be. I have a very different view of what constitutes real inflation. When I construct a model of the deterioration of my own purchasing power in U.S. dollar terms, I do it including tax. The CPI, which is the index that most people look at, doesn't include tax. So when people look at the CPI and they see a 3.2 number, they think that their purchasing power is getting destroyed to the extent of 3.2% compounded. Against that, 4.7 looks okay. You're making 1.5 points. I believe that the purchasing power of my U.S. dollars, and I'm an old fat guy, I don't buy much, is deteriorating at 7%. So for me, if I buy the 10-year Treasury at 4.7, I'm absolutely positively guaranteed a loss of 2.3 a year. It's extremely unattractive. Now, if people say to me that they're buying the 10-year for capital gain because they think there's going to be an interest rate pivot and that bond yields are going to decrease, making the price is going to go up, I say, okay, but I'm not a bond speculator. I buy
and not that was
bonds for income. I outcompete other speculators when I speculate. And when I speculate, I don't want a 20% capital gain in a 10-year bond taking illogical interest rate risk. I want an 800 or 1,000% gain in an exploration stock where I figured out the outcome faster than the market. That market is irrelevant to me because I don't invest or speculate in the bond market. To me, from a fundamental basis, it looks like a guarantee of no return.
That's interesting. We're just trying to figure out, like, where's the capital flowing and why isn't it flowing really into our sector, right?
Well, I believe that the capital isn't flowing in our sector because our sector has underperformed so massively over the last 40 years. I think this sector deserves to be lower priced than it is.
Yeah, you've been saying that for a while. Yeah, absolutely. So, and the market is right. Like, it's telling you that the trend is intact there.
The market is ebullient. The market is pricing these companies in aggregate much higher than they deserve. There's 1,500 public companies in the sector. There may be 200 of them that deserve to exist. That means there's 1,300 issuers, probably 70% of the market, 80% of the market that are flotsam and jetsam.
There's another topic that popped in my head, but I'm not going to go there. Rick, fantastic conversation as always. Appreciate the candor. It's great fun always chatting with you. Thanks so much for making the time.
I'd like to remind your viewers, if I could, that if they care about their natural resources, to go to my website, ruralinvestmentmedia.com. List your natural resource stocks. I'll rank them 1 to 10. Don't expect me to be generous. I will comment on stocks that I think my comments might have value in, and I look forward to hearing from your people. Please understand if they submit them now that I'm on the road for a month and they won't get a response for 6 weeks.
Fantastic. I'll put that link in the show notes as well. I really appreciate it. Everybody else, thank you so much for tuning in here from the New Orleans Investment Conference. I hope this was of value. I think for me it was. Always great chatting with Rick. Make sure to subscribe to the channel. Really appreciate that. Engage with us, and we'll be back with lots more content.